Hi, this is Scott from Scott Pulsini Trader, and this is the section on the Titanic setup. So please take a second to read this disclosure. All right, so Titanic was one of the first things that I ever noticed about the SI indicator. When I started watching it, I started to notice how these big buy iceberg areas the market really responded to. So it's an absolute advantage to understand this. Understand icebergs and how the market moves around them. Titanic is a setup where a market runs into a hidden iceberg order and immediately rejects the area. Icebergs are larger players, funds, trading firms, etc., and are also known as the smart money. Icebergs are orders with only a small percentage shown in the order book, with the remaining hidden quantity triggered when traded into. These bigger entities must hide the size of their orders to prevent algos from front-running their large orders and causing them to fill at much worse prices. These players are called smart money because many times these players make themselves smart because they can control the market with their orders, and it's often an advantage to be on the same side as these orders, especially in areas that you deem support, which would be buy ice or resistance, sell ice, etc. Icebergs aren't always correct in market direction, but they are correct more often than not, and many times the icebergs will keep coming in until the market relents and moves the other way. It is an advantage to know what direction the big money is taking. It's a huge advantage many times. So get into some examples here. So this is soybeans. You can see here 468, which is a lot for soybeans. Threshold in here is 150 to 200. So this one actually was moving up here. The sell ice came in and the market responded. So the Titanic setup. So this one was actually an ATR retest failure type of look that we discussed in other videos, the different ways you can take these trades. So again, like these other setups we've talked about back in my original course, I talked about getting in the minute you see the market move below with some market orders in that direction, so sell orders, and you put your stop right above. This one you would have avoided any kind of stop out, and then you could have written it down. And then once again, there's different ways. If you're not looking for that, or you're looking for the way I get in with ATR, then you wait for it to get an ATR out of here. Depending on the area, if you want to be aggressive, you sell it right when it moves out of there, or you wait for the retest failure. So, all these setups are basically the same types of entries, whether it be aggressive or retest failure, or you can get in if you're one of those traders that hates risking more than they need to and like to get in a couple times. Most of these examples, yeah, they would have worked if you got in, but there's going to be times where it revolves around that area and you'd be stopped out multiple times. So the way I trade them is from trial and error. So you can trade them however you want. Like I said, I always say this is the science. How you trade these things are the art. But you do need to know this is there's big orders coming in here that are hidden that the market ran into a wall of and responded to for a very nice trade. And this is a whopper. This is a 30 cent trade until I actually get down here. And this was actually a broken ice setup, which we'll cover in another video. So this is a perfect example right off the bat. The smart money is not always right. And again, we never know what these big houses are doing, right? Are they getting out of longs here? Are they hedging options? Are they hedging the other months? You're never going to know. I say this nonstop. You're never going to know what the entity's doing unless you're sitting next to them or you're God Almighty. So I always approach these setups in the very basic, simplistic view of entering, they're entering the market, because it's uncanny how the market reacts to these areas, right? So, again, the market orders came in, the big money, or the people are trying to buy into this, and they find out they're wrong, and then they got to puke them up. So, next example. This is natural gas. There's quite a bit of sell ice here. I don't have an actual quantity, but you can see it was more than 500. The market it was coming down, and someone tried to buy it. You see that big blue buy bubble, and ran into that whopper and led to a huge move down. This isn't huge, but it's 40 cents. Again, this is another example where you could have waited for the first move out of here, put your stop above, and you catch this market, or you catch this move, I should say. This one did not retest fail at this time. So this one would have been more of an aggressive entry. So, you know, I have certain areas where I don't wait for retests, like we talk about. So you have to, decide on your own based on what you look at if this is worthy of getting into either right when the break of the zone, waiting for an ATR getting in, and not waiting for that because, as we know, the markets don't always come back and retest the zones. They do a large percentage, but not always. This is gold. So this was a good example of, you had 224, another 152. You can see somebody's trying to swipe this thing. You see the blue bubbles. They're sweeping right into mouthfuls of buy ice. And the market just launched out of here. It does look like it did this looks like an ATR retest type of move. But the other thing you can do too when you're using the sweeps indicator, which we'll talk about in another video, you're sitting here deciding, hey, should I be aggressive? Say this is an area that you're not, you don't absolutely love, and you don't know whether you should be aggressive or wait for the retest failure. And all of a sudden you see some buy swipes coming in there. Obviously there's blue bubbles, but then you got somebody sweeping these things too, sweeping the order book. And then you see another sweep. You're like, okay, I'm in. I'm going to get in, and then I'm just going to put my stop below here, and then you catch this move up, right? You can just see these buyers. Not only did you have hidden buy orders, and then somebody came in here and was sweeping it. This is things very, very likely going to rip, and of course, right to the liquidity that we talk about all the time in my other videos. This was Russell. RTY, so you can see here, this is actually a pretty wide zone. This is actually a huge zone, but the market didn't respond. So someone tried to buy this aggressively, ran into a whopper sell ice threshold, and Russell's 150. This was almost 500. I don't have this one labeled either, but you can see on the scale here, it's almost 500. And then ripped out of here. So once again, you can say, hey, the minute this moves out of here and I see sell bubbles, I'm in, and you got a risk. I mean, this is a 100 point zone, but you can see this market moved down quite a bit. So this was that's 100, 200, 230 and counting when I did the screenshot. So and then this was I didn't put what happened here. This was a day of my trade room, but I'm assuming that this was then sell ice here, and then it ran into buys and probably did some kind of rip back up. But either way, you're risking 100 ticks if you're trading. Even if you're just putting the stop on the other side of the zone, you're risking 100 ticks. After that comes in, you get in here, you're risking here, or ATR. Even if you do the ATR, this is still a multiple risk reward trade that reacted nicely to that area. This is ES. So another example of market comes down, moving lower, runs into 1,600 buy ice hidden orders, and then somebody's sweeping this order book. So this is you don't see this very often. When you see it, this is the exact time where you don't have to wait for an ATR or wait for a retest. You see hidden buy ice for 1,600 plus whatever that was. This is probably over 2,000. And then somebody's sweeping the order book. I mean, look at these sweeps here, 6,000, 4,000. This is one where you can just hop in right away, risk right below there, and just ride this puppy up. This is a 15-point winner plus. And then you can see the swipes came in there as well and moved a little bit below and then reacted. So this is an outlier type of look. But, this alone is telling you somebody's buying it heavy here, and then you see buy swipes, market order swipes. That's just telling you bye-bye to the upside. This was natural gas again. This was buy ice. I don't have the amount here. It was definitely over 150. 150 is my threshold. And there's another example of buy ice comes in, and then somebody already started swiping it. Then they tried to sell it, and they ran into that mouthful of buy ice there, and then they swiped again. This is another one where you can say, okay, I'm in. I don't need to wait for a retest. I don't need to, hope it comes back. I'm in aggressively right there, and I put my stop either on the other side of the zone or an ATR like I do. Either way, you're not stopped out of this trade. And this was quite a move up as well, 60, 70 ticks. And it did bounce off here. I don't know what it ended up doing the rest of the day, but you're going to notice also that the market's just inherently react to these areas when they come back, because it's where traders got loaded up and they want to peel out when it comes. If they are able to hold on long enough, wait for it to come back, they peel out. Many times that leads to the next wave up. This was NQ. So I don't have this labeled either, but this is, you can see on the scale, 200 buy ice. Market came down. Someone was aggressive selling, swiping, sweeping, sell bubbles. Moved a little bit below, but this was not at the time an ATR for the way I trade this. And you would have never been in this. We talk about, if you want to be ultra aggressive, the minute it breaks above, there was no break above, so you still wouldn't have been in this to be stopped out, even if you popped above and you put your stop right below. So you're waiting. Breaks above, you can get in right there, or you can trade my style where you wait for ATR retest failure. And again, here's another example of, once it did move back out of here, then somebody started swiping some major orders in the order book here. So this just gives you added confidence, right? You're sitting here, say this is a support area that you're watching, whatever it is. You see big buy ice come in, sellers off sides, and then you start seeing swipes. It's like, okay, bye bye. At the time when I screenshotted this wasn't that big of a move, but I believe this went much higher the rest of the day, but especially with that kind of activity after it. This was crude. This one I do have labeled. So you had this move here and ran into 168 sell ice. I don't know what this was. This looks like either way this was, sell ice, and then even if this was buy ice, this was a broken ice setup, which we'll talk about in another video. But this area was obviously important, especially coming up into this. You can see there's swiping, buying, sweeping, no dice. Once once it gets below here, there's another example where you can sell it, put your stop right above here. I think this was the zone here. This was something else, but either way, it never even came close to that. This is one where it didn't retest, where you would have been aggressive on the entry, but this led to almost 100 tick move, almost a dollar straight move down from that area. And then this is silver. So silver, we have lower thresholds. That's 100. These combined were 100. You can see it wasn't quite 100, but these added up. So again, if you get setups that are right after each other, you can use them as one and make it a threshold event. And this was that, and this market did the retest on this one and moved lower. So you could have waited for that. Again, it depends on the area, and it depends on the way you want to trade these. If you want to wait for the retest failure, depending on the area. This is just yet another one where you could have just hopped in right when it broke the zone. What you can do also is do a portion, right? So say you got your risk sheet, the risk that you're taking. Say you want to put on 10, or in this instance 10's a lot, but say you wanted to put on two big contracts. Well, you can put on one right when it breaks, risk above there, and then you can wait something like that where then you put on the other one type of thing. So you get aggressive with not a lot of risk on the first one, and then you're more conservative on the entry on the other one. Either way, this was a nice trade here. Natural gas again, sell ice. Here, I don't have that one labeled, but again, if I'm showing examples, they were definitely over threshold. This was at least 150. Market ripped right into this, ran right into it. Another example where you can get in right when it breaks the zone, put your stop out, or do a portion of your order. This one did do the ATR retest and then move lower. This was 40 ticks and counting when I did the screenshot. But you can just see how these markets react to these orders. Once again, the big money cannot just throw in 200 lots here. I mean, look at this order book. The big money comes in and drops in. Well, you can see right there they did. I mean, this is just resting liquidity. But if the market's trading around here and the big money just drops a 200 lot in the order book, these algos, especially in natural gas where it's algo ridden, they'll just run this thing away trying to make that order chase for worse prices, and then they'll snap it back. So this is the main reason that they try to hide their orders. But you can see, hidden or not, the market knows where these areas are, right? So do you now. And that's the last example for the Titanic setup. Again, extremely powerful, and especially if you're looking, for support and resistance, you're gung ho on selling an area, whatever this may be, VWAP or whatever you look at, and you're sitting waiting and you're waiting, and then you see sell ice, you're like, okay, now I got the big money in my back as well, I'm in, right? So, and then another thing that you can look at, I don't have that on the slides, I may do it as a bonus video, but keep track of your icebergs for the day as well. So over a course of a day, we've seen this all the time, like in ES or soybeans or NQ, you'll see like waves of ice, and the market kind of just, it makes moves, makes nice moves, but it's not like some huge move. We'll keep track of that because you will be shocked, a day to a week from now, the area that you saw, 1,500 sell ice come in over the entire day, and then you look, and then a week later the thing's down, multiples from where it was, right? So that's another thing you want to keep track of. Yes, this is where day traders, I'm a day trader. These markets move ridiculous from these areas, but when you see a bunch, keep track of it, and you can catch some whopper moves for longer term trades, either with options or if you want to hold a piece of an order, knowing that, hey, that somebody's selling a ton of that. We see it all the time, and like I said, ES and NQ bonds, and then we get these huge moves, a few days later. So keep that in mind as well. That's the Titanic setup.